How do you fund your franchise without the need for traditional lenders? In today's podcast, Kenny Rose from FranShares will show us how they have built a private investment community of more than 70,000 subscribers, successfully funding the startup or expansion of franchise systems. Now let's get to it. From FranShares, welcome to the podcast.
Thank you so much for having me. Excited for this.
Kenny, getting started, you've been in franchising for a while now. What do you think makes someone successful in franchising? What qualities would you need? 2 or 3 qualities you'd really need to be successful in franchising?
I mean, first and foremost is drive. It's like owning any business. No one's going to do it for you, and you have to have your own internal burning desire in order to go and make it successful. Um, Secondly, personality. I mean, people like working with people they like. And so you need to be someone that is enjoyable to work for and work with. And then finally, I just have to call it steadfast is, follow the process, know the outcomes, and keep going through. So those are definitely, I'd say, some of the top traits that you need to have.
Yeah, and the follow the process, as you mentioned it, it's like I hear it time and time over again. Every single podcast we do is about following the system and following a precise system, a franchisor's way of doing business.
hmm
And interesting to see how people divert from that in many cases.
Yeah, I definitely see. I mean, there's a lot of ways that people can divert. And honestly, sometimes it starts right at the beginning. Like you're looking at what your initial investment can be or should be. And, people think, oh, I can save a few thousand by not spending as much on the grand opening marketing, or I can save this amount by doing a different location and this amount by hiring a different manager. And they think they're really suave and saved $50,000, but really it's they just ruined the foundation of building their business. And then that's before you even start following the system as a whole.
Also, I feel like you've been in franchising for quite a while. Do you feel franchising is as successful now, the business model, as it was when we first started doing this?
I think it is and it isn't. I think it still generates great returns for people who are willing to follow it, but I think there are a lot of bad players that may have bad intentions or just not sure what they're doing. And so people try and sell franchises for the sake of selling franchises and put the wrong people into the wrong systems. And so it's still a great model. I think it's just that not everyone uses it in the best of ways. It's like the internet. It creates endless possibilities, but they're not all great.
Yeah, and the word selling franchises is something that kind of gives me the creeps every time I hear that word, because you're supposed to be awarding a franchise, you're supposed to qualify the candidate and do
hmm
something responsible as to make sure you're bringing the right person into the right situation.
Yeah, and it can be hard to do that because whether it's like their fit, their finances, it's not everyone has the warm and fuzzies when they hear that F word. And a lot of times, like they need to figure out what it fully is. And, it's not right for everyone. And so I think some people are just trying to get paid and not worrying about their fit, but instead, just how to make a buck at the end of the day.
Do you feel that people are usually undercapitalized when they're coming into this franchise situation?
I'd say majority of the time. There's minimum net worth and liquidity requirements that most brands have. And I think a lot of people like tend to just hit them. And I think this creates two problems. One is, as I mentioned, you're trying to undercut costs to save money because it's your own personal capital. But then at the same time, I think people get scared because when you just qualify, that means you're all in. And it's very scary being all in. And, every day you're worrying about your failure because you just went all in on this. So yeah, I think people do tend to come in under financed, and they should be looking at things that are less expensive or taking on additional partners, or looking at something that's just maybe just waiting for the right time when it's going to be a better fit for them.
And I think this is where you come into the picture here, where you have this particular concept that's kind of new to me. I mean, it's not new altogether, but it's kind of Interesting. What do you do with FranShares? And
Yeah.
tell me a little bit more about that.
Yeah, so well, as background, I spent over a decade on the franchise consulting or franchise brokerage space, awarding franchises to people who were looking to find the right brand for them. And over time, I realized there were a couple problems. One is that most people who have a ton of money, they
Mhm.
don't want to go run the business. They want someone else to run it for them. They've had a successful career. They want to kind of coast a little bit. And that's not burning desire, like I mentioned before. And on the other side, you've got people who are really hands-on operators, have a ton of great experience, but they got their experience in the industry, and that did not get them to be millionaires and be able to afford a franchise. And so FranShares was created to solve this problem. We connect investors directly to franchisees. So on one side, we're creating a whole new asset class that is being able to invest in franchises, an income producing, equity growing, diversified investment. And on the other side, we are funding the right operators, people who should be franchisees, who should be the owners that are going to run it every day like their job. And so, I saw this as like people getting into the wrong businesses at times, but then also again, under financed. You want to make sure that they are properly capitalized to go and run the business the way it should be and not be afraid. Like we're a venture backed company, and when we went to raise money, it wasn't like, hey, what's the bare minimum you need to survive? It's like, hey, what do you really need to go turn this into something big? And I think that's how franchises should be funded too, is like have more than 3 months of working capital. Be able to invest in a good space if it's a physical location. So really being properly capitalized in the right hands is really important.
So yeah, and I come across a lot of people that say, "Well, I'd love to have the franchise. I just don't want to work on it day to day." And how exactly does the program work? Do you have to qualify them, or do you find these people that come towards you, or
Yeah.
how do you fit them? How do you match them up with the right concept?
Yeah. So, I would say we're vetting for three different things. It's the brand, the operator, and the opportunity. And so we're vetting on the brand side to make sure that there's someone who's, it's a brand that's well established, has their systems in place, and is very predictable. The operator, we want them to have that operating experience. Like this should not be their first rodeo. And those operators come in two pretty different forms that we get. Both inbound and referred. But people will come to us who are already franchisees and they want to expand or they want to acquire, they want to remodel. And they're usually like maybe they've already done a bank loan, they've maxed out SBA, or they're trying to grow fast and banks look at you like you're buying homes. And so they're not going to fund you to do that big expansion. They're going to fund you one at a time. Um, and then the other side are these operators who have the hands-on experience with the brand, but just have never been financially qualified. In both cases, we tend to go right to the franchisor because they know who all these people are. Like when you go to them and say, hey, who are your franchisees that should be expanding but don't have access to capital? Hey, who are the people who have applied to be franchisees or you'd love to be franchisees, but they don't have capital? So the brands know, and honestly, they're also the best judges of who's going to be successful in their brands. So, it's we don't want to try and fit that square peg into the round hole when that round hole has a whole bunch of round pegs laying around.
Yeah. So and actually, with when you have a really good operator, you go into the franchise already. We were just at a multi-unit franchise conference. I guess you have multi-unit operators that want to expand and want to grow, except they don't have the capital.
Hmm.
It's a lot easier for you, I think, to identify an investor when they already have a track record. That
Yep.
franchisee has already a track record.
Yep. And I like to say it's kind of it's like with any investment, risk and reward, is that your risk is reduced by working with existing franchisees or ones that come from other brands that have a history of success. But on the other side, they may have terms that are more favorable to them because they have proved it out before. And then you can go with new operators, which again, we reduce that risk by working with like experienced ones, but and they're going to be giving more favorable terms to investors, especially if they're like net new locations. So and I always say it's important to diversify between the two because you want that balance of profits as well as reduced risk.
Do you ever work with a first timer, a startup, something that?
Yeah, so we'll do that, but again, when they're referred by the franchisor and there's someone who has that history within the brand, We get people who reach out to us that say, that they came off the corporate track and they want to own a franchise. And, while I think they could be successful, we don't know. And also, it's a major change going from a cushy corporate job to running a small business. And so, we want to work with the people who have the experience in these small businesses already. Again, to use the comparison to like venture investing into startups, you look for people who have the right experience and the right drive and the right business plan. And the franchise takes care of the business plan, so you're looking for who's got the experience and the drive. And that comes from people who are from the brand and have done this before. It shouldn't be a completely new endeavor for them. And again, you're thinking about investing, you're like, yeah, I want the person who was a district manager of 5 locations. They've been doing this already for years.
Yeah. And let me ask you, let me be the bad guy here. Uh, they're going to be paying a royalty to the franchisor. They're going to be paying their marketing fees and whatever other fees they have. How narrow is that profit? Because especially in I know in food service and QSR, the margins are not
Mhm.
tremendous. So how did you fit that in, that return to that investor, um, in addition to all the fees required by the franchisor?
Yeah, so this is actually kind of where it comes into a benefit as opposed to going the debt route,
Okay.
because you can have tight margins, your bills still due. You got to pay the premium. Hey, you had a bad month, bills still due. No matter what, the bills still due. With investors, you think about it like friends and family, is that they are only going to get a share once there are profits being made and there are enough profits to be able to share. So like they're giving time for the business to ramp up. And they're also equity partners. So eventually there's some form of exit, whether that's selling to another franchisee or private equity, or the person that you helped funded can now do a loan to buy out investors. So yeah, and that's why you try and diversify across different industries as well. And we try and do mostly like multi-unit locations so that you can then grow those margins and have more room for investors in there.
And how easy is it for you to actually find these investors? I mean, are they? Is it a common thing? I mean, are there enough people available?
Yeah, I mean, we've already gotten over 70,000 investors that have signed up that come from all walks of life. And, you've got your retail crowd all the way up to your family offices and private equities. And, it's still an education for people because this is a new asset class for them. But I found that people are looking for a couple different things. They're looking for alternative investments. The average financial advisor says you should have 20 or 30% of your portfolio in alternatives. But really, people are just doing that portion in real estate. That's been what people know. It's real estate and precious metals. You've seen them expand to things like crypto, but a lot of people don't understand that still, and they don't trust it. And people are looking for an alternative that they can understand and that makes sense. They're also looking for things that are income producing, and it's getting harder and harder to find income producing investments, and that's what franchises are. So I found that it fits what people are looking for. It's just something that they haven't thought of before. So it's been really great. Like anytime we put money towards marketing, we see great returns on signups and people investing because it's just once you get the messaging right and you educate properly, they're like, oh, this is what I was looking for. I just didn't have the ability to.
So instead of you're bringing your experience in brokerage, and instead of brokering a business, you're now brokering a partnership here.
Yeah, that's exactly it.
Okay. Um, so wow, how do you have an example of something that you've done recently where you've funded,
Yeah.
had a successful?
Um, So great example. They were first time franchisees. Basically the husband wife team that they were store launchers for Buffalo Wild Wings, and together they launched like 150 stores between them. Great operators, but they worked for corporate and didn't have the capital to really get going initially. They actually went into a brand called Teriyaki Madness. They scrounged everything together to grab a underperforming store, doubled the sales in the first like 2 months, and wanted to get their next location going. And so we crowdfunded capital to fund that location. And, I always try and be, under promise, over deliver with investors. And so I said, hey, based on their item 19, that average earnings, I'm like, you should plan a 3 or 4 year ramp up to get to that point. And they ended up beating it in the first year. and they are just continuing to grow. And their catering orders are through the roof. Their like everything has just been going super well. And so I see they actually won franchisee of the year as well in that brand. And so that was just a real testament to getting capital in the hands of hands-on operators, and they will go run through a brick wall to go produce.
Well, it's funny you mentioned good operators because I had a podcast recently with a gentleman who made a living out of taking distraught locations and buying them for 10 cents on the dollar and then turning
Hmm.
it around for six figures in the first year.
I
I
believe
mean,
it.
those I assuming are you do you target any of these locations that are just struggling franchisees that are just suffering and not creating.
It's definitely a future path, but it also comes with its drawbacks. Because again, we're really well educated in franchising. We know that's a great route, but the average person is not that well educated in franchising. And so really what they're typically going to do is they're going to look at the numbers of the business and go, wow, this is a dog. I don't want a piece of this. And we can explain, hey, this is a great operator. They're going to know how to turn it around, but you're still going to be looking at the numbers of that business. And it's a much bigger leap. And so it's a path that we'll definitely be going towards, but I think it's just more as our market of investors, matures and is more educated in the franchise space.
Because I figured it'd be easier to be able to show, hey, look at the upside on this thing.
Yeah. And I found the same thing with other races that we've done where I'm like, these are incredible operators. This is a great brand, but people be like, I've never heard of this brand, so I don't want to do it. And as a guy in franchising, you're just like, everything is here that you need to be successful, and they're crushing it now. But it's just that it's that education gap when you don't spend a career in franchising. So I agree with you. It's just it's a path to get investors to be really comfortable and understand that as well.
And the truth is that most people don't even, in general, don't understand what franchising and how it works. You have to kind of educate them because if it's the first time around, the first rodeo for them, it's difficult to have him, especially with an unknown brand. Because
Yeah.
once people come and say, well, I want to buy a Dunkin' Donuts, and then you try and set up a meeting with them. Okay, well, I'll pick you up for a discovery at 4 o'clock tomorrow morning. What do you mean 4 o'clock in the morning? Well, to be at Dunkin', you're going to have to make sure your coffee and your donuts are baked before
Yep.
the
Uh,
rest of us get up.
that's why I was saying someone with experience, like the person who's already been doing that for years, they'll be like, yeah, I'll be ready. I'll have coffee in hand.
Yeah, yeah. So, all right. So it's not so difficult to get the investors or find the investors. Um, Obviously, if you have the franchisor connections, there's kind of a sweet pie for you that you have the buyers and the sellers.
Yeah. I'll say it's just it's an education journey for both sides.
Mhm.
Investors are interested and you get them more comfortable and then they invest. And same with the franchisors. Like had to work with some like younger brands starting off, and now we're going to be launching with Dunkin', Comfort Inn, California Pizza Kitchen. The Makos and Meinekes of the world. And so like when it's these big brand names, like again, it was a time to educate them and get them really comfortable, but now we're launching with them. And so we're in a really great spot. I'm excited for the future.
And is there a difference that you see? Obviously, dollar wise, there is a big difference from doing a choice hotel, which is $7-8 million, whatever it costs to build one of those things
Hmm.
out, as opposed to a 350, $500,000 subway.
Yeah. So yeah, I mean, honestly, we've done all sorts of different raise sizes from like 500,000 upwards to 10 million. And so, it's just a different amount of investors. And honestly, what we'll do a lot of times too is that if they are a cheaper type of business to build, we'll say, hey, let's go raise to do 3 to 5 of them. And so that way the franchisee is able to not only execute, but once they're ready, they can start scaling fast. Because that's always the tough part is that you spend the time to get the foundation and operations set for your initial one. Then you're ready to expand, and real estate wants you to have the money ready to go, and the money wants you to have the real estate ready to go, and it just becomes like a very long, drawn out process that hurts your ability to grow fast in a market.
Yeah, and I guess depending on the size of do you? Another question is, do you have multiple investors in one particular project, or do you choose pick and choose, or?
Yeah, so multiple investors invest into each offering, and current offerings we have right now are just for accredited investors, but we're opening it up to non-accrediteds again in the coming months here. And I find that it's better to have more investors. We always promote local investors first. So, like, I'm in Chicago, and I'm in McDonald's backyard. But if I can invest in a Burger King, I'm going to Burger King now, and I'm telling my friends to go there too. And so it's this real world thing of having your network being able to drive additional revenue. I mean, that's part of the reason companies franchise is they want that local pair of boots on the ground to be in the community. And with this model, you're able to change that from one pair to hundreds or thousands of pairs that are now advocates in the community for your location. And so that's just something that's never been done in franchising. And even in crowdfunding, which is what we do for franchising, there's crowdfunding for real estate, there's crowdfunding for artwork, but those are things that are just a line in your portfolio thousands of miles away. But a local franchise, that's something that's tangible and something you can be a part of.
And that's the other question is geographically, do you try to find local investors for the local
Yeah.
franchisee, or is it?
So we'll start with local investors who have signed up. They get first dibs. Then we'll start marketing to the local area because we want more local investors. And then we'll open it up to the rest of our sign up list. So again, we'll take money from everywhere, but I find it's I'm trying to be mutually beneficial for the investor and the franchisee. And so for getting local investors in there is going to benefit their business, which is going to in turn benefit investors again.
And another question is the ugly three letters in the room. How do you navigate the FTC? Do you have any issues with that as far as disclosure documents or any kind of?
No, it's all been great. I mean, honestly, I think going through Duncan and Spire's corporate team, legal team was a great practice in it because, basically it's that these individuals that are investing, they're not becoming franchisees. They're your friends and family. They're investing into an entity. They're not getting the training guide. Usually it's going into a special purpose vehicle. So it's like a one line item on their cap table. And so these investors are truly passive, truly silent. And that's what makes this all really go round is that they're not becoming franchisees; they're becoming passive investors.
So the point person is the actual franchisee regarding to the FTC and
Exactly.
the
Like,
disclosures and whatnot. Okay.
yep, exactly.
Any other regulatory agencies
Yeah.
that kind of control you?
Oh yeah, the SEC is great friends.
I
But so how this is all really possible is through something called the Jobs Act, jumpstart our businesses and startups. And it all started because of Kickstarter. People were putting money towards a product or service that they wanted to back. And eventually people started saying, well, can I get equity for doing that? And it's like, okay, now it's a securities issue. But they wanted a middle ground between going public and just private backdoor dealings. And so they created the Jobs Act where you could crowdfund capital into an entity. And so there's different ways you can do it based on like types of investors you can work with, how much you can raise. But these are all different exemptions that are through the SEC that we work with. So no, a lot of lawyers we deal with to make sure everything is very black and white, and it allows us. I say it's great for investors because we're essentially regulated by two different agencies, and it's something that like investing in real estate, like yeah, there's SEC regulation, but then there's not really real estate regulation.
and you're not, it's a completely different animal when it comes to returns, because you're not dealing here in the stock market. You're dealing here in an actual operating and working business that's actually producing something. No.
Yeah, exactly. Like benefits are you're getting cash flow, and also you're getting consistency. And you're also not having to deal with people that are just manipulating the stock market or people investing based on sentiment. It's just,
Yeah.
are people still grabbing coffee? Are
Yeah.
people still getting oil changes? It's something that's very different. People like the diversification.
Any particular industry that you favor, or it's just all in general
I want
franchising?
people to be diversified everywhere. So, like, we've got food, we're entering hair care, automotive, fitness, hotels. Um, Honestly, I think that's the beauty of what we do is that you don't need to have a favorite anymore because you can diversify into all of them.
I think that anything else you want to add that would just bring potential clients to your site?
You know, I always say it just begins with education. I'm very big on being over educated first. So like even when you sign up, you get a investor guide to like learn about franchising. And I want people to add me on LinkedIn, and so they can follow along with like get put a face to the name, understand things we talk about, and it's building a relationship. We're not in it for invest as much as you can in this one project. It's I want you investing in projects for decades to come.
And you have quite a few case studies already that you've actually done. So it's obviously proven. I think one of the items that I think it comes back to mind is um, you want to have someone invest something that they can afford to lose.
Yes, always.
I
I always
mean,
tell people do less for longer. Because same time we have a trading platform launching soon, so you'll be able to trade shares. But it's like investing in any business. If you invest in it and then 2 weeks later want to pull your money out, well, the business hasn't been built or grown yet.
yeah.
And so we'll have recommended hold times. And so I'll say, hey, invest less, plan for that longer hold. And also, it's an alternative investment. So, again, we reduce risk as much as possible based on the brand and the operator and the opportunity. But, you still want people to be cautious with how they're investing and making sure they're not going all in on something.
Well, it's simply a 401k, it's the stock market, everything else. You're looking long term. Just because you
Divert.
lose, the market drops like this past week, everybody goes into panic. You don't. If you're a long time investor, you're going to sit there because it'll come back up.
Yeah, exactly.
Yeah.
Exactly. So,
Yeah.
yeah, it's thinking long term and diversification. Those are definitely the big things for us.
All right, Kenny. I think that's. I mean, I've actually it's been a teaching experience for me because I think that this is something that may actually help a lot of the franchisors build up their sales.
Oh, yeah.
After COVID, a lot of the franchise concepts had a big of a drawback in regarding new franchisees. So this might kind of
Yeah. Well,
spark the.
for one, I'm very flattered because with your experience, I'm glad to teach you something new. But yeah, on the franchisor side, what I've said is that this removes their biggest barriers to growth. Like even McDonald's could add 10,000 more locations, but their first kink in the pipeline is we're looking for millionaires. There's not a ton of them, and there's not a ton that want to go run a McDonald's, and so we're allowing them to build their pipeline. I want someone who's going to own and operate it, who's got 10 years of experience in McDonald's. And that wasn't possible before. But now, when you've got outside investors, you make it possible.
Well, I appreciate your time today, Kenny, and look forward to having another chat with you sometime in the near future.
Thank you so much. Me too.
Thanks for joining us today, and hope you have gained some valuable insights into the world of franchising. My name is William Lesante, and I would like to invite you to the next episode of the Franchise Coach podcast. Please make sure to like and subscribe and share with your network. Also, click the link below to learn more about franchising with Action Coach. Thank you.